BRICS need to be prepared. Trump has done it again. A shocking 100% tariff on BRICS nations: Brazil, Russia, India, China, and South Africa. Love him or hate him, this bold move has sent shockwaves across the world. What does this mean for the US? Will BRICS hit back? Could this be the start of a new economic battle that changes the balance of global power forever? This isn't just some small issue. It's a high-stakes showdown that could affect every one of us. Let's break it down. Trump's announcement. Trump's announcement of a 100% tariff on BRICS nations has shaken the global economy to its core. During a recent high-profile policy statement, he declared this bold move as part of his strategy to put America first and address what he calls unfair trade practices. The announcement wasn't just another soundbite. It sent immediate shockwaves through markets, with stocks reacting and global leaders scrambling to respond. Economic analysts across the board were quick to chime in, with some calling it a game changer and others warning of a looming economic disaster. Media outlets around the world lit up with headlines, framing this as a potential start to a new era of economic conflict. Leaders from BRICS nations were notably swift in their responses, holding emergency meetings to discuss their next steps. Trump justified the move by pointing out long-standing trade deficits with countries like China and India. He argued that these tariffs are necessary to level the playing field, protect American industries, and counter what he perceives as economic aggression from BRICS nations. According to Trump, the US will no longer be a punching bag for nations that take advantage of us. This announcement wasn't just about economics. It was a clear signal of the US taking an aggressive stance against the rising influence of BRICS on the global stage. The question now is, how will the world respond to such a dramatic move? BRICS economic power. BRICS, comprising Brazil, Russia, India, China, and South Africa, isn't just a catchy acronym. It represents some of the most powerful emerging economies in the world. Together, these nations account for nearly 25% of the global GDP and over 40% of the world's population. With their combined strength, they've been reshaping global trade and challenging the traditional dominance of the US and its allies. Each BRICS nation brings unique strengths to the table. Brazil is a global agricultural powerhouse, supplying the world with soybeans, beef, and coffee. Russia dominates in energy exports, particularly oil and natural gas. India has positioned itself as a tech and service hub, while China remains the factory of the world, producing everything from electronics to steel. South Africa, though smaller, is a key player in mining and precious metals like gold and platinum. Over the years, BRICS has worked collectively to challenge US economic dominance. Initiatives like the New Development Bank, NDB, aim to reduce reliance on Western financial institutions like the IMF and World Bank. The group has also been exploring ways to settle trade in their local currencies, reducing dependence on the US dollar. Their growing influence has made them a force to be reckoned with. Now, with Trump's announcement of a 100% tariff, the stakes are higher than ever. These tariffs could severely disrupt trade flows between the US and BRICS nations. For example, China, which exports electronics, machinery, and consumer goods to the US, could see billions in trade vanish overnight. Similarly, Brazil's agricultural exports like soybeans and beef, which are critical for US markets, could face serious challenges. The ripple effects won't stop there. Industries dependent on BRICS imports, like tech, construction, and agriculture, could see costs skyrocket, ultimately impacting American consumers. This is more than just a tariff, it's a move that could reshape global trade dynamics in ways we haven't seen before. Potential impact on the US economy. Trump's 100% tariff on BRICS nations might sound like a power move to protect US industries, but let's talk about how this could shake things up for American consumers and businesses. Tariffs, after all, aren't just about foreign countries, they hit home, hard. First off, prices. Think about all the products that come from BRICS nations, electronics from China, coffee from Brazil, and even raw materials for construction. With a 100% tariff, those costs are going to shoot through the roof. For everyday Americans, this could mean paying double for a smartphone, a laptop, or even your morning cup of coffee. Inflation has already been tough on wallets, and this move could add even more strain. Then there's the domino effect on businesses. Many US companies rely heavily on BRICS imports for their supply chains. For instance, American tech giants depend on parts from China and India. Construction firms need steel and other materials sourced from BRICS nations. A sudden spike in costs could lead to project delays, layoffs, or even closures for companies that can't absorb the higher expenses. Now, what about BRICS' response? Retaliation is almost guaranteed. Countries like China or India could slap tariffs on American exports, everything from agriculture to machinery. Imagine the Midwest farmers who already face tight profit margins, suddenly losing access to massive markets like China. That's not just bad for businesses, it's devastating for local economies. But the ripple effects don't end there. If these trade tensions escalate, it could influence the Federal Reserve's decisions on interest rates. Higher consumer prices from tariffs could push inflation up, forcing the Fed to raise rates even more aggressively. On the flip side, economic slowdowns from disrupted trade might make the Fed reconsider rate hikes to prevent a recession. It's a tightrope walk that adds uncertainty to an already volatile economy. This tariff war could also weaken the dollar's dominance in global trade. As BRICS nations seek alternatives, like trading in their own currencies or partnering with other allies, the US could find itself increasingly sidelined. That's a dangerous place for an economy that relies on the dollar's strength to maintain its global influence. In short, while this tariff might be aimed at BRICS, the fallout could hit US consumers, businesses, and the economy in ways that are hard to predict and even harder to contain. This isn't just about trade, it's about the entire economic balance of power. Global trade wars reignite. The announcement of a 100% tariff on BRICS nations could be the spark that reignites full-scale global trade wars. And this time, it's not just about goods crossing borders, it's about entire alliances shifting, power balances crumbling, and economic systems being pushed to the brink. Let's start with the obvious risk: retaliation. BRICS nations, collectively responsible for over 25% of the world's GDP, aren't going to take this sitting down. We're talking about some of the biggest players in global trade: China, India, Russia, Brazil, and South Africa, coming together to find ways to counter US influence. They've already been working on de-dollarization strategies like conducting trade in their local currencies. This tariff could fast-track those efforts, making global trade less dependent on the US dollar and further isolating the American economy. And then there's energy. BRICS includes some of the world's top energy producers. Russia, Brazil, and South Africa are key players, and China and India are massive consumers. Could energy exports become a weapon in this standoff? Imagine Russia deciding to cut oil and gas exports to nations aligned with the US, or Brazil prioritizing trade deals with China over American markets. Energy is the lifeblood of global economies, and any disruption could cause chaos, from spiking oil prices to supply shortages that ripple across the world. Meanwhile, OPEC, the oil cartel that includes major BRICS members like Russia, could step in as a wild card. If OPEC nations align more closely with BRICS to counter US pressure, they might limit oil production or redirect supplies to BRICS-friendly nations, squeezing the US economy even further. Energy dependence has always been a geopolitical weapon, and this tariff move just gave BRICS nations a reason to use it. The bigger story, though, is the shift in global alliances. Countries outside BRICS, especially in the global south, are watching this closely. If they see the US as too aggressive, they might lean toward aligning with BRICS, deepening trade ties with China, India, or Russia. This isn't just speculation, it's already happening. Nations like Saudi Arabia have shown interest in joining BRICS, and this could be the tipping point that accelerates that trend. A divided global trade system could emerge, with one bloc led by the US and another dominated by BRICS nations. And while the US has historically relied on its allies in Europe, even those partnerships might face strain. European nations, already reeling from energy crisis and inflation, might balk at fully backing US trade policies if they hurt their own economies. In short, what started as a bold tariff announcement has the potential to unravel decades of trade stability. We're not just looking at economic tension here. This could redefine how nations collaborate or clash on the global stage. It's not just a trade war anymore, it's an economic chess match, and everyone's next move matters. China's strategic response. China, as the dominant player in BRICS, isn't just watching from the sidelines, it's preparing for its next strategic move. The US's 100% tariff on BRICS nations puts China in a particularly precarious position, as its trade relationship with the US is one of the largest and most complex in the world. First, let's talk about supply chains. China's economy is deeply tied to its role as the world's manufacturing hub, exporting everything from consumer electronics to industrial equipment. A tariff this severe could force US companies to rethink their reliance on Chinese manufacturing. And while China has spent years diversifying its trade partners through initiatives like the Belt and Road Initiative, losing access to the US market, or even seeing a significant reduction in trade volume, would hit its economy hard. But don't count China out. It's already shown it can adapt quickly to trade challenges. For instance, China could accelerate its Belt and Road Initiative, strengthening trade ties with regions like Africa, Latin America, and the Middle East. This would not only counterbalance losses from the US market, but also deepen China's influence globally, something that BRICS as a bloc could leverage in their favor. China also has options for retaliation, and they're not small ones. Cutting back on imports from the US, like agricultural goods or advanced technologies, would be a major economic blow to American industries. Let's not forget that China is one of the largest buyers of US agricultural products, especially soybeans. A cut in these imports could create ripples throughout the US farming sector, sparking unrest in regions heavily dependent on agricultural trade. Another powerful move in China's arsenal is currency manipulation. If China were to devalue the yuan, its exports would become cheaper and more competitive globally, essentially neutralizing the impact of US tariffs. This wouldn't be a new strategy for China. It's used currency devaluation in the past to navigate trade disputes. However, such a move would have significant repercussions for global markets, potentially sparking a currency war that could destabilize economies far beyond BRICS. And the US-China's long-term strategy may also involve fostering new alliances. The country has already been a vocal supporter of de-dollarization efforts within BRICS, promoting trade in local currencies to reduce dependency on the US dollar. With this tariff announcement, those efforts could gain even more traction, potentially weakening the dollar's dominance as the global reserve currency, a key pillar of US economic power. Ultimately, China is unlikely to back down quietly. It has too much at stake, both economically and geopolitically. From cutting US imports to leveraging its currency and strengthening global alliances, China's response will be calculated, strategic, and likely aimed at minimizing its vulnerabilities while maximizing its leverage in this growing economic confrontation. If the US thought a 100% tariff would make BRICS buckle, China's response might prove them wrong. This isn't just about trade, it's a battle for the future of global economic dominance, the dollar versus BRICS currency initiative. One of the biggest ripple effects of Trump's tariffs could hit the US dollar, long considered the backbone of global trade. For years, BRICS nations have been quietly working on a bold plan to reduce their reliance on the dollar and establish their own alternative global reserve currency. Trump's aggressive move might just give them the push they need to accelerate this game-changing initiative. At the heart of the BRICS strategy is the desire to break free from the dollar's grip on global trade. Currently, over 88% of international transactions are conducted in US dollars. This gives the US tremendous leverage over global financial markets. However, the proposed BRICS currency initiative aims to change that by offering a reserve currency backed by a basket of commodities, including gold and energy resources. This initiative, once seen as a distant dream, could now gain serious momentum as BRICS nations rally together to counter US economic pressure. The implications of such a shift could be seismic. If major trading partners begin conducting business in this new currency, the demand for the US dollar could shrink dramatically. This would not only undermine the dollar's dominance, but also make it harder for the US to finance its growing debt. Remember, the dollar's status as the world's reserve currency gives America a unique advantage. It can print money to pay its bills. But if the dollar starts losing its global appeal, that privilege could vanish, leaving the US economy vulnerable. The global financial markets would feel the tremors too. A decline in dollar dominance could lead to increased volatility in exchange rates and higher interest rates, as investors lose confidence in the dollar's stability. Countries holding large dollar reserves, like Japan and many European nations, would face tough choices about whether to stick with the greenback or diversify into the BRICS currency. For BRICS nations, this moment represents a massive opportunity to strengthen their collective economic power. China and Russia, in particular, have been vocal advocates for de-dollarization. With Trump's tariffs as a catalyst, they could double down on their efforts to persuade other nations, especially those in the global south, to join the initiative. If successful, this would mark a historic shift in the global financial system, challenging decades of US economic supremacy. However, this isn't just about economics, it's also a battle of ideologies. BRICS nations argue that a multipolar currency system is fairer and more inclusive. while the US insists that the dollar is a stabilizing force in global trade. Trump's tariff gamble could end up accelerating this ideological clash, forcing nations around the world to pick sides in an increasingly divided financial landscape. The stakes couldn't be higher. The dollar's dominance isn't just a financial issue. It's a pillar of US geopolitical power. If BRICS succeeds in undermining it, the entire balance of global influence could shift and the world might never look the same again. What happens next? Trump's bold move has set the stage for what could be the most intense global economic showdown of our time. Will this tariff lead to fiery negotiations? Or is the world about to witness the rise of deeper divisions between global powers? Diplomatic efforts might ramp up as both sides seek ways to de-escalate tensions. Will we see a series of high-stakes summits, with leaders from BRICS nations and the US attempting to broker deals that could avert an all-out economic war? The stakes are enormous, and every decision could ripple across the world. For Trump, this is a make-or-break moment. His supporters see him as a fearless defender of US economic interests, standing firm against foreign competition. But to others, this move risks alienating key players on the world stage and potentially isolating the US in an increasingly interconnected global economy. And then there's the question, how far are BRICS nations willing to go in retaliation? Could they accelerate their plans for a dollar alternative, forming alliances with other global powers to reshape the financial landscape? The repercussions could redefine global trade as we know it. As the battle lines between the US and BRICS are drawn, the global economy braces for what could be its most defining chapter yet. Will Trump's gamble pay off and solidify US dominance? Or will it backfire and ignite a new world order where BRICS emerges stronger than ever? One thing's for sure, the world will be watching every move.